let's get more about what this mega deal means for the media space. Joining us now is Jessica Reif-Ehrlich, the senior media and entertainment analyst at Bank of America. Jessica, great to have you with us on a day like today. What do you think is the biggest ramification of this deal in the industry?
It's a really big deal. And it's the second time that the old Time Warner found a home that wasn't expected. But at least this time it's in media hands and will be nurtured and hopefully come back to life. I mean, Warner Brothers or the old Time Warner has amazing assets, and we shouldn't forget that. They just wilted under AT&T's management. So we'll see. We'll see, what businesses develop, and I think it will be a completely different story in a year. But there are ramifications for, the entire sector. From a Discovery AT&T perspective, there's going to be a complete change over the shareholder base. If 71% of the new company will be owned by AT&T shareholders who are used to a 7% dividend, they're not going to get that from a company that has to invest to drive the streaming business. So there will be a change out from that. In addition, historically, whenever there's a big acquisition in media, no matter how great it is, your parent company, Comcast, made the most brilliant acquisition with incredible financial terms when they bought NBC Universal in 2 tranches, but it was an amazing deal. And the stock really went sideways from the time they announced it until they closed. So Discovery is sort of stuck in deal limbo right now anyway, and they won't close until mid-22. So I think there's a lot of opportunity, but it will take some time to play out. For the rest of the industry, it's kind of like Disney buying most of the Fox assets. It's a time for reflection for the big media companies.
Right.
What assets do they need to have over the next 3 years? Obviously, brands matter, scale matters, balance sheets matter. And I think they're all going internally and saying, what do I need to have? What can I dispose of? What can I acquire? And so you put companies into play. You guys just talked about Comcast,
right.
Comcast, who would be an acquirer, but Viacom, who knows if Shari Redstone really wants to sell. There are tons of pieces, whether whole or in parts, that are incredibly attractive. Fox is small enough to be broken up further and go away, and they have great assets, but they have a great balance sheet. They could also get bigger.
Right.
So this is a time we're going to see a lot of movement.
Right, sure. And I'm wondering, with AT&T selling its media assets, with Verizon doing the same, Jessica, and I know you've been a bull of Comcast for quite some time. You've got a buy rating on the stock. Why is it that Comcast model works when the others don't, owning the pipes and the content? And does this prove that that Comcast is a great executor of this business model, or does this prove that maybe they should internally reflect and think about separating core from content?
The answer is the former. Comcast has phenomenal management from the top down, from the corporate, from Brian Roberts down, and from the divisional level at every part of the company. They really run their businesses well. And if you look at NBCU, which is run by Jeff Shell and everybody under him, they've just done a phenomenal job. So, as much as tough as the run at Warner, the old Time Warner, has been under AT&T, it's been quite the opposite at NBCU. So, and I think it really goes to Comcast management style and who they hire. They've done a great job integrating the businesses as well. And I do think it's likely that they ultimately get bigger in media. I mean, there's lots of companies that would fit in, that could help their theme parks, that could help their streaming business, content that really would fit with them.
Hey, Jessica, it's Tim. Thanks for joining us. A fascinating day, as you said, in the sector. So now you're left with, 4 mammoth streaming plays, and then a lot more consolidation possibly to go. But whether it's Netflix, Disney Plus, clearly Peacock, and now what we have here. What do you think is really the net end game for everybody? Are they going to sit tight, or do you think there's more consolidation? Because again, there's some that have direct exposure and more exposure to linear networks, not so good. There's some that really have the studio, the content. They all have different, call them advantages here.
I totally agree. This is a chance to kind of rearrange assets. But again, scale matters. You remember, Disney acquired a lot. From over the last 10 or 15 years, Bob Iger bought Pixar when he took over, followed by Marvel, followed by Lucas, which is the Star Wars brand. So they have a lot that was purchased. Comcast bought a lot with NBCU. And again, I think there's probably room to grow through acquisition as well. This is a big move by Discovery, but now they have to flesh out their direct-to-consumer plan. So they're, they have the potential, but they're certainly not there right now. And so for other players, the other players are not. Of course, there's Netflix and Amazon, but everybody else has to scale up and figure out a strategy. I'm going to again go back to Comcast and NBCU. They have a different strategy, and it's really interesting. So Peacock, with their AVOD strategy, is a great opportunity or a great platform for advertisers.
Right. Jessica, we have to leave it there. Thank you so much for joining us.
Yeah.
We do appreciate it. Jessica Reif Ehrlich of Bank of America Merrill Lynch. Dan Nathan, the media industry, this space has changed so tremendously over just the past 5 years. What do you think? And this is might be a curveball, but I know you can handle it. What is the media deal that we haven't thought of yet that you think is coming down the pipe?
Well, Mel, you remember when Karen and I broke some fast money ground? I think it was last month or so. We did like a double power pitch on the Viacom. And Jessica just mentioned that this is not the one that is not on people's radar, but it's likely the one that should happen. And when you think of the size of it and the enterprise value of this thing, under $50 billion, I mean, this one makes a lot of sense to me, especially for some of those competitors now who are looking at Disney and looking at this new combination and looking how to size up for what will be just a different landscape going forward with, as Tim said, a handful of streaming behemoths.
Shepard Smith here. Thanks for watching CNBC on YouTube.